Hey folks, welcome to Weekend Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This is the update for the week of January 12th through January 16th, Monday through Friday. Now what I want to do today, folks, is go over the charts, what happened the last week or so. I also want to set the stage for the coming week when we talk about economic news. Is there any earnings news coming up? What do we have to kind of be aware of, not only in the charts, but aware of also when you're talking about economic and earnings news, because that can always cause a near-term spike or drop in the markets based off of what we're seeing here. So I'm going to go over all that kind of stuff, but let's first start about talking a little bit about what happened last week in the markets. Right now you're looking at the 10-minute SPY chart. And you can see just on Friday alone, it was a unique day for a couple reasons. Number one, you had a gap up, a slight gap up, and you can see the gap up right here off of the jobs data, the unemployment data that came out Friday morning at 8:30 a.m. But ultimately, it was just a sell the news type event, as soon as the market opened, we saw a hard sell on the market, leading us into that key turn period at 10 a.m. Eastern Time. Now, that 10 a.m. Eastern Time period took us really in a flat sideways to slightly higher diagonal pattern here, as you can see right here, leading us up until we got to right around 3:30, 3 o'clock. Now 3 o'clock, 3 p.m. Eastern Time, 3:30 p.m. Eastern Time is another key level in the markets, or time in the markets, and you have to be aware of that. Oftentimes you see a sell at 3 or 3:30, and sure enough, Friday was no different, as we sold beautifully here at 3, and then a little bit of a bounce into 3:30, and then another hard sell at 3:30, leading us into the close. Also note the volume, the heavy selling volume right into the end of the day on Friday. And we had a nice little down day where the markets were down about 1 to 2% across the board, leading into the Friday close going into the weekend. Now, how does this set the scene? Because last week we saw a nice sell-off, and it's interesting because in the money stocks, my partners and I, we had done a lot of calculations, and we had a sell signal for last week. And early on in the week, you can see that the market actually wasn't obeying us. And what do I mean by that? Well, we had really a nice little pop, or at least a slight move up on Tuesday, and the thing that we said was, guys, we feel this is a false move. And a lot of people say, well, why do you think that? Well, there were a couple signals out there. Number one, on Tuesday when the markets were up, we saw ExxonMobil, Apple, and Goldman Sachs all down. And you can see right now, by the way, folks, you're looking at the 60-minute chart. So this is showing us here Monday, Tuesday, Wednesday, Thursday, Friday, all in a row here on the 60-minute hourly chart of the SPY. Now, the key here, folks, is this, is that we were seeing not only signals in stocks like Goldman Sachs, which is a market leader, Apple, which is a market leader, and ExxonMobil, which is a market leader, but we were also noting topping patterns in oil as well. And when the oil falls, right now it's causing the market to get weak as well. So we're looking at all these patterns and saying, wait a minute, this is not right. We should see a fall here, and we set out that alert on Tuesday to all our Research Center subscribers that this was going on. And sure enough, what do we see on Wednesday? A heavy sell where the market comes down extremely hard, and we had a key level put out of support on the way down. And number one level was right here, and number two level was right here. Okay, and we had a number three support level, which was right here. All right, and these are all levels that we had drawn in the Research Center for our premium subscribers at InTheMoneyStocks.com to alert them where to look for the market to possibly find a little bit of support, and should it go below it, then look for the next level to be hit, and so forth all the way down. Now, here's what happened, and this is why it's so unique. And by the way, we had another level during the week. We were alerting all our subscribers to all these key levels, and in fact, I want to bring up another thing here. Let me throw this in as well. All right, now, our last level, obviously, was the 200 moving average here. So the beauty of this week on a technical side is that it followed to a T all our levels to the downside. On this day right here, we said, guys, this is a faulty day. This is a false positive, if you would. Look for a sell-off. And sure enough, what happens? The market gaps lower on Wednesday following our lead. Now, again, those of us that are with us in the Research Center obviously was able to take shorts on a swing trade basis and make a lot of money this week. And the key being this. So on Wednesday, you gap lower, and look where you gap down. Our key level that we had drawn in the Research Center on Tuesday was this level, and we gapped right below it. And notice how the whole day you're not getting above it. Here, if I extend this line here, notice how you're never closing above it on the 60-minute chart, and that was a dead signal that we were going to go lower. So sure enough, you sell off and you come down to our second level, and sure enough, you look at how you don't go below it in all these candles. So you're really trading on the 60-minute up and down between these two support and resistance lines, because remember, this was a support line, but as soon as you go below and you can't get above, it becomes resistance. So this becomes S1 on the R1 on the upside, while this becomes S1 on the downside, support 1. So here you are having a support line below it, and sure enough, you can't get above this one, and you keep hammering on the downside, you break lower. Where do you go? Right to the 50 moving average on the downside, which was our next level, and we close right on top of that. Now that's leading us into a day where we started to get a little bit of a bounce, because on Thursday you got a little bit of a mixed day. You got a couple indexes up and a couple indexes down, and I'm extending that line to show you for a reason here. And sure enough, here we are. Okay, so you open up on Wednesday right on our support line S2 at this point, our next support line on the downside, and sure enough, you kind of hammer above on that upper side, and you come down and you hammer on the downside, up, down. And remember, if you're looking at these levels, in intraday you could have a great play, because you know if it gets up here, it has resistance, and more than likely it's going to come down. Sure enough, it does, then it goes back up. Now here's the interesting part, because you really close a candle right here above, but notice this, you don't confirm it the next morning. Alright, to confirm it, you need to see a close on the 60-minute, or ideally a move above. And also note this, and this was a beautiful call by us, because on the Thursday night video on the Research Center, I called here as a bear flag was forming. And I want to show you that bear flag. Notice how you had this big down move right here, okay guys? And so you had a big down move, and then you trade sideways to slightly up. Those in the Research Center, those in the chat room, those of you that have been watching the intraday videos should know by now that's a bearish signal. When you trade sideways to slightly up, it's really setting up for another leg down. And in addition, when we closed above this key resistance line here, this one, because we're below it, obviously, remember that on the upside now, this one becomes resistance. Not only do you not confirm it the next day by not going higher the first candle, in fact, it's a sell candle, but in addition, you went right up into the 50 moving average. See this blue line here? This purplish line, that's my 50 moving average on the daily. So you close right into major resistance there, and you also have the 20 sloping down, which is also telling you there's a bearish signal there. Okay, so notice that little bearish signal coming down, which is going to put more pressure here, and sure enough, look at where we move up to on that first little candle. You move up right into the 20. That's a sell signal as well. So you had about 3 different things. Not only do you have a bear flag, but you have the 50 moving average and the down sloping 20 telling you this is a bearish pattern. Sure enough, what happens? We go down, and this is actually what we set out in the Research Center that evening on Thursday night. We said, guys, this is a very bearish pattern. Even though we don't necessarily know what the unemployment data is going to be and the jobs data, this is telling us that more than likely you're going to see a sell-off. Sure enough, what happens Friday morning? You sell hard and move all the way down, and again, you move sideways the rest of the day in a bearish flag pattern. Notice this bear flag pattern. A sideways move after a big down move is a bearish, and notice what happens at the close. You sell off going right to our last support line, which is also the 200 moving average. So the whole week could be beautifully choreographed by these levels that we had inputted on each Research Center night. And again, I do encourage you all to come and join the Research Center to get these levels on a current basis. Again, I'm recapping the week. Now, what I want to do here is just kind of go over to the daily chart quickly, and then I want to quickly move into some economic and earnings news this week, as we do have a little bit. Okay, folks, I've switched to the daily chart of the futures, which the ESH 9 contract, March 09 E-mini S&P 500. It basically mirrors the S&P 500, and I want to just draw on some lines here about our key lines in the market right now. These have been our key lines ever since we started here, and you guys obviously know our accuracy that we've had and continue to have, okay? And I'm not going to really discuss it because this is for our premium subscribers to know what each line means here, whether or not it means we're going higher or lower, but I think it's important to realize these lines are in here for a reason. It's a definite reason, and you need to be aware of what these lines mean on an intraday, daily, and weekly basis. Okay, so there's our lines on the daily chart. These all have significant meaning, and again, obviously, we tell our Research Center folks what each one means and what to expect off each one. Is it a bounce? Is it a breakdown level? Is it a rally level? Is it a short-term bearish, short-term bullish signal? And again, we do and disclose all that kind of stuff. All right, and last but not least, I'll leave that up there while I go into a couple of the economic news this week. but the earnings this week are pretty light, although it does consider this today, it does consider to be, or this next week is going to be the kickoff to earnings season, and you have to be ready for that because it's going to cause a lot of whipsaw. In addition, this week is options expiration, and you have to know what that means as well. Volatility this week could be in play. You could be able to see a lot of whipsaw on Wednesday-ish, going into options expiration on Friday, so be ready for that options expiration week. We also released in the Research Center a turn date, and those of us that are current subscribers to that premium service on our website obviously know the turn date and how significant it will be, so be ready for that as well, and you can join up to find that out. Now, this week, guys, on Thursday is the key day for earnings. Other than that, there's really no significant earnings. And Intel reports on Thursday after the close, as well as Genentech, DNA, symbol DNA, Intel, symbol INTC. Now, Intel kind of pre-reported last week, but again, it should be interesting to see their projections going forward. And Genentech, watch for that as well. There is a bid out there currently for that company, and it should be very interesting to see what's going on there. Economic news, folks. Quickly to go over economic news. This week will be retail sales on the 14th, January 14th. That's the first major data coming out. Crude inventories on the 14th on Wednesday as well at 10:35 a.m. Eastern Time. The 15th on Thursday, you get core PPI, initial claims. That's going to be big, folks. You're going to see job losses there, as well as the core PPI is going to give us inflationary data and all that stuff. PPI and CPI coming out on Friday will be big as well. So watch for that, folks. There's going to be some significant data later in the week. Have a wonderful week. We'll talk to you soon. Take care.